Hey, what's up everybody? This is Brian with Where Rebels Are, and today we're going to go over the average true range or the ATR as a study. We're going to talk about it and help to understand how to use it for price projecting and better understanding price action in shorter time frames based on what you see. So let's start with what the average true range is. Wikipedia. All right, average true range, or ATR, is a technical analysis indicator by market technician J. Wells Wilder Jr. in his book, New Concepts. It's an indicator taken as the greatest of the following: current high less the current low, the absolute value of the current high less the previous close, or the absolute value of the current low less the previous close. The ATR is then a moving average, generally using 14 days of the true ranges. So what this is saying is it is taking each day that you see data on the stock price action, and it's saying day one's high was $5, day one's low was $4. So the average between that is X, and it's projecting that out over time. So the range itself was $1 on that day, and then it's calculating that going over 14 days, and it's giving you a final output. What is the average difference between the high and the low over the X amount of time? 14 is the default, and as I like to kind of follow the studies as standard, I keep the default, and it shows up for me best on the volume chart, and I'll tell you a little bit about why I do that. But if we look at the S&P 500 specifically, or the SPY ETF, right now we're at 394.32 today, and the ATR itself is reflecting as 536. So this quickly tells me that the difference between the high and the low over the last 2 weeks, 14 trading days, which would be almost 3 weeks, has been $5.36. So that helps me to kind of identify either up or down which direction I think that the stock's going to go and by how much. So if we go to look at it, we've got 536 divided by the current price, which is 394.3, gives us a 1.35%. All right, when you're talking about percentages, you just move the decimal over, and that gives you the percentage. So 1.35% is the average volatility each day over the last roughly 3 weeks of trading. And so that kind of helps me to identify mentally how much volatility to expect on a given day. If I see that the price action was drastically different than this number, then I know that there's something I should probably go looking for in terms of news. Why is this so much more volatile than it has been recently? And that's the kind of question I'm asking. If I see it less volatile, like in today's case for the SPY, we're at 0.37, which is basically just a quarter of this expected volatility. That tells me things are quiet, not much is going on, and don't be aggressive in my trading. And this is kind of a level set that I like to use just in my own trading. Whether you're active trading on a day trade or you're trying to set up a swing trade, this is a really quick way to look at, especially when you apply it to something like the SPY, to gauge the overall market conviction for the day, the action, get an idea or a feel for what the rest of the market is thinking, or on a particular stock, individual security, how people are reacting to news or lack thereof, kind of a gauge. So that's a quick baseline to give you an idea on how much volatility is there. Let's talk about the actual use. Now that you can kind of see how it's easy to gauge or think about using that data, how is it used? I put it on my volume chart, and the reason I put it on my volume chart is you will see quite frequently situations like this. Right here, we see a very sharp increase in volatility. It was declining, quieter, and you can kind of see price consolidation aligning here. And then an immediate spike up, and it's leading volume at that point. So if I see volatility go from declining to immediately a sharp turn up, that's telling me that things are going to start to get more volatile. I would not be so convicted to enter a buy point here on the chart, because down here on the volatility, we're getting a significant spike, which means to me the market is uncertain. Okay, so this is a good gauge of overall market conviction and or certainty. Now, if I had already seen a trend going up right? This wasn't a dip, but this was a continuation of the previous trend, and I saw volatility starting to increase, then that might be an indication that the stock is going to continue from a momentum perspective. But it was clearly going down. Then the 2 green days, we see a sharp uptick in the ATR, is to me a point when the market's kind of uncertain. So they weren't sure that it should continue to go down, but I'm also not so sure that the conviction is going to continue, because there was no positive trend before that. And then you can see it continues to spike with the volume, follows the volume increase quite well, as is normal. More volume generally means more volatility. It doesn't necessarily have to be up or down days, down days. Most people equate volatility to down days. It can be an up or a down day. So at this point here, we can see that the volatility is starting to kind of crest and peak and slowly start coming down. This is an indication to me that the market's moving into a consolidation area, because volume's mixed, volatility is slowly declining, and you can see not any major conviction in moves on a singular day for the S&P 500 after that point. So that's why I put it on the volume chart, because at least for me, when I'm reading the ATR, it's easy to kind of look at and gauge what the price action volatility is through the ATR, and how that correlates to increasing or decreasing volume. For me, it's a nice gauge for volatility, and that's how I like to use it or read it. The next trick for ATR, and this is something that the reason why I decided to continue to put it on my charts, is when we look at the ATR's current number, 536, how do I use that information to project entry points for a trade, or even to assess a swing trade's potential for profit? So I'm not going to do any analysis on overall thoughts, but I can see that roughly the S&P 500's overall in a positive trend. Stochastics are starting to kick up. Recent volume is positive. So I'm going to project that the upcoming moves are going to be positive. So I'm betting here a bullish direction. With ATR being where it is, 536, what's my time frame? All right. Do I think that it's going to have a move tomorrow, and I'm hoping for something more? Well, volatility's falling slightly here, and price action's already kind of popped up. So I don't think that the move that I'm going to project would be tomorrow. It just doesn't feel like a tomorrow kind of thing for me. So I'm going to say my outlook based on the overall trend is going to be 3 weeks out. Okay, with 3 weeks time, how do I factor in or assume what the max potential move is to the upside? Okay, because I'm bullish. Over 3 weeks time, we're going to take the ATR 536, and then we're going to ask ourselves, are we very committed to this, or overly bullish? Do I think that something really big is going to happen, or are we a little bit more cautious? Do we think it's going to move, continue positive, but we don't see any signs that it's going to be drastic in terms of a pop? So if I think, looking at things, it's getting quieter, right? Volatility's falling. We're also kind of moving into the middling time of the year where trading activity kind of dies off before everybody goes to summer vacation. So I'm going to say it's about a lower conviction. So the rule is to use it in thirds. If you are over convicted on a direction, either up or down, it doesn't matter, you use 2/3 of the ATR for your price projecting. If you have light conviction and you're pretty sure it's going to mostly go the direction you think, then you use 1/3. Okay, so 536 times 1/3, which is 0.33, is $1.76, or 77 if you round that up to the next penny. So $1.77. That is the maximum move I can project out per day. Now, I'm going to project this number, this $1.76, over 3 weeks. I'll tell you, stock doesn't move the same direction, or an index for that matter, 3 weeks straight. It just doesn't happen. So there's going to be ups, there's going to be downs, and there's going to be flat days. That's the one thing that you can count on in the market. It will go up, it will go down, and it will go sideways. You don't know how much of either. But with that $1.77 and a light conviction over 3 weeks' time, I'm going to assume that it's going to be net positive 1 week out of the 3. 1 week up, 1 week down, 1 week flat, and that nets it out. So 5 trading days is all I'm going to give myself for the projection to the upside. So times 5, 885. is the high-end movement or price expectation over those 3 weeks. That's not a lot. But again, I've got a lot of reasons to kind of doubt a major move. There's no major news on the horizon at this point in time. Most of the big events that kind of were expected for the beginning of 2021 have already kind of played out. We're waiting for the summer cycle. We're not going to have data on that until probably another 6 to 9 weeks out from today. So I'm comfortable with this being a relatively small move. If I wanted to add a little bit more, I could add an extra 2.5 days or day and a half and say maybe this goes up to $12 or so. But right now, $8.85 or rounded to $9 on upside potential is where I'm going to base my action. And that was all stemming from what the average difference between the high and the low has been over the last 3 weeks of trading, 14 days. ATR 14. Okay, if I'm going to translate this data into information that I could use for a day trade, again, that $1.77, which is 536 times 1/3 or 0.33, that $1.77, if I'm basing price projections for tomorrow and I say that the move is going to be greater than $1.77, then I'm overestimating my action for tomorrow, and it really doesn't kind of align with what the assessment is that I've done at this point. So that's how I use ATR. It's something that I definitely think you should check out. If you want to ask questions on this, feel free to come join us when we're live on Twitch. I stream Monday, Tuesday, Thursday, and Friday from 1 p.m. Eastern until about 5 p.m. Eastern. And you're free to join our Twitch and ask any questions. But in the meantime, I hope that you found this video helpful. And if you liked it, like, subscribe, all that fun stuff, and come join us in our Discord. Links are down below. That being said, this is Brian with Where Rebels Are, and I will see you on the next video.